Evan, thanks for being with us today.
Thanks so much for having me, Dave.
I want to congratulate you on your recent Nasdaq listing.
Yeah, it's really exciting. We did a virtual bell on the closing this past week also, and it's just been really exciting to sort of move up to the major leagues.
Well, I know it is, and it opens the door to a lot of investors that previously could not buy your stock when you were on the OTCQB. I want to start today for viewers that may be new to your story. Give us a brief overview of the company and your business model.
Sure, and thanks again, Dave. Recruiter.com is the leading platform for on-demand recruiters and recruiting technologies. So what that means is that companies, large and small, come to Recruiter.com to find talent. And they want to find talent faster and better. And they do that by either leveraging our on-demand experts of recruiters. Think of it as like Uber for recruiting. I need a recruiter with a certain skill set in a certain place, certain location for a certain period of time, and they engage our platform to actually get access to that recruiter. Or we have tools, artificial intelligence enabled tools to help find candidates around the globe, engage with them, screen them through video technology, and curate them as part of a pool. And together, these two sides of the business really create an incredible and powerful solution for enterprises large and small.
How's the business model different from traditional recruiting companies?
That's a great question. You know, fundamentally, the question is always, do you want to do it yourself or do you want to have someone do it for you? If you want to do it yourself, you're using companies like ZipRecruiter and Indeed and LinkedIn, and that's great. Many companies, large and small, don't want to do it themselves, or they need help. They have lots of roles they need to fill, et cetera. And so they're turning to companies like ours. Now, we do a little bit of what we would call direct hire, which is success-based. Think of it as an attorney that works on contingency. This sort of engagement model, you're really seeing a lot more in the recruiting industry. It's actually the fastest growing segment of the recruiting industry. The recruiting industry, recruiting and staffing, is about $120 billion. Of that, about $6 billion is in what we would call the recruitment process outsourcing space. And that's really companies leveraging recruiters to do these services and do this functionality, whether it's 10 hours a week, 40 hours a week, or for 6, 7, 12 months at a time, really engaging them in that process. Now, to answer your question, when companies engage our platform like Uber, we take a percentage of the money that's being paid to the recruiter. So if they're going to engage a recruiter for $12,000 a month or $18,000 a month, we keep 20% of that and we pass the rest over to the recruiter. Everyone's working as a 1099 or a contractor in that regards. Our subscription model works like your very traditional software subscription, and we generate about 90% margin on those subscriptions. And subscriptions range based on the complexity of what we're doing, the scope of what we're doing, and the number of services assigned to it. And that could start with as low as $4.99 a month. That's a little under $500 a month, and work its way up to $5,000 a month, depending on the level of services necessary.
Evan, you have clients like Pfizer, Coca-Cola. Talk to us about how they use the platform.
Some companies have a constant need for certain talent, and companies like Pfizer and their other companies really have an ongoing appetite for high quality talent, and they're always looking for ways to get this talent. So either they need additional recruiters to assist their in-house recruiting teams because either they're scaling up faster or some other reason that they need contractors. And I would say the same thing. To any company. Gee, even a law firm might say, gee, we have an issue, we have a project that requires a specialist. We don't have that in-house. Let's go get a specialist. And we see that happens a lot. So these companies are going to want to scale up and down on an on-demand basis their talent acquisition team, and they're able to come to our platform and really get access to incredible, talented experts in recruiting. The other is they always need a pipeline in this situation. That you need a pipeline of specific talent on a regular basis.
Well, that leads me to my next question. You've actually created a jobs index. You appear on CNBC periodically. Talk to us about that index.
Sure. So about a year ago, and I actually took over as CEO in June of last year, recognized that we can leverage our network of recruiters to really serve as the air traffic controllers for the job industry, right? Who knows better than the taxi driver of is there a lot of activity going on in Manhattan on a regular basis? The taxi drivers are a great litmus test for there. We really viewed that our recruiters as being this incredible air traffic controller for the job market. So we surveyed them. We published the results, and I've been on CNBC every month talking about candidate sentiment for new opportunities, what industries the recruiters are seeing. Are they seeing remote work, in-person work? Are wages increasing? What industries are they seeing high growth in? And it's really been a phenomenal tool for us to help us navigate our own sales efforts into where the hockey puck is actually going. But it's really proven to be very, very effective in predicting what's actually going to happen in the overall job market itself.
Evan, you raised $12 million in your recent offering and uplisting to Nasdaq. How far does that take you?
Great question. We actually raised another 1.8 in the over allotment. So it was a total raise of $13.8 million. And more importantly, or equally as important, it was a very successful uplist for the IPO round. They're all really happy. The unit itself is up significantly since it launched, and we're really happy for our investors. The use of proceeds is really to fuel our overall growth. We're working with some very large customers that need for us to expand. We have opportunities from sales opportunities and new industry opportunities, and really growing. We have incredible pipeline of product that we're now expediting the overall development on our artificial intelligence tools to really help recruit talent faster and better. And we're going to be doing some acquisitions that we talked about in the S1 as well. So all of this is really towards fueling the company, getting our growth numbers, and at the same time achieving profitability.
You had a strong first quarter. What does the revenue growth look like over the next 12 months?
Yeah, so at the beginning of the year, I set off really 4 priorities. I share them internally, I share them externally because I take it very seriously. One was uplisting to NASDAQ with a successful uplist round, scaling revenue in line with our targeted valuation to around $40 million run rate by the end of 21, achieving profitability or P&L neutral on an operating expense basis, and then finally building a company we could all be proud of. With our first one completed, we're really on a great trajectory. Our Q4 to Q1 growth was 39%. 99% of that was organic. So the acquisitions that we made to really build out the platform are all kicking in really in Q2. We're really excited about our prospects and our growth prospects, and really achieving the rest of our priorities and objectives throughout 21.
Evan, that certainly sums up the essential value proposition. I think you're trading at very low multiples compared to your industry comps. A lot of upside, I think, I see in your company.
I couldn't agree more. I think when it comes to a post-pandemic stock, we are that post-pandemic stock. Every day you read about jobs and job shortages and talent shortages. We are that solution, and we are the post-pandemic stock. Dave, thank you so much, and I look forward to sharing our continued success with you.